April was my first losing month of the year. After a massive Q1 where I was up 57%, I took a 6% hit on gold. But here's the thing. Despite a 31% win rate this month, I'm still up 52% total for the year. Today, I'm going to show you exactly how I kept a bad month from becoming a career-ending one. This month was a battle of trade management. I took 17 trades on the 15-minute opening range breakout strategy I'm testing, and the market was incredibly choppy. I had to get aggressive, taking partials and moving stops to break even just to survive. If I hadn't managed these trades with pure discipline, that 6% loss could have easily been 20%. I recorded this backtest completely blind, not knowing if April would ever turn around. Watch how I handle the psychological pressure of a mounting losing streak, especially in the beginning of the month. With that said, let's jump into the charts, starting off on April 1st. Okay, we're here April 1st, 2024, starting our backtest of micro gold future contracts using the 15-minute opening range breakout strategy. We'll continue the exercise to see if this continues to be profitable. Let's jump right in. We have marked out the high and low of the 930 candle. Going to jump in for the 1 minute and play price forward. Of course, we're looking for a candle close below one of these levels, just like that, and then some type of retrace in the opposite direction. There we have it. I'm going to try and zoom in so that it's super easy to see here. So this is the line to beat if we're going to continue to be short. So we're just waiting for price to come back to that level, just like this, and close below it. I don't count this candle since it did not close. It looked like it just closed on the line. Now this next candle does close, and it does have the volume, which is one of two entrance criteria with the strategy. The question is, will the next candle leave a fair value gap? It doesn't. So that is a failed attempt as part of it, and another candle close below. So this is our second attempt. It does have the volume, but will it have the fair value gap? It does, even though it's a small one. So both criteria have been met. The volume on the candle that breaks and closes above our key line, as well as leaving a fair value gap. So we're going to combo here. We're going to target the top of this fair value gap as my stop loss. I've gone to the 5 minute to find my placement of stop loss, since higher time frame gives more confidence that price won't revisit any key areas. So for example, this fair value gap, I think, has been properly mitigated with the aggressive downside. There's no reason for price to come back here. If it does, it's likely to continue going up, in which case I'll deal with that. But for now, this is our trade. No more max. We're seeing a max of $125 now that we're in Q2. So that allows me only one contract to trade here. So be it. We're going to place our trade and then play price forward. Now, one thing I will do is move to break even once I hit 50% secure, which hasn't quite happened. I don't know if that would have been it, but I'm going to keep playing price forward. I'm going to hit a stop loss here. No, price comes back. So at this point, look how close price came to stopping me out. It was only that little bit of distance I keep above the fair value gap that saved me, because I definitely see this as a liquidation, right? Most people would put their stops right on the fair value gap. This Wick liquidates it and then moves immediately down. At this point, I don't see a reason for price to come back since it's mitigated this full fair value gap. So I'm going to take the majority of the risk off here. You know what? I don't like this fair value gap here. So what I'm going to do is I'm just going to place it right above in this area. So I've taken some risk off the table, not all, not even most, but some. If price continues to go down more, I'll definitely go back to break even. Let's see what happens here. Price came back to that fair value gap that we were looking at, right? So this fair value gap has been revisited. So let's see what happens. I have to close my trades at 4. It doesn't matter. I get stopped out. So in that case, that was our first loss in the month of April. We'll move forward to the next day, jumping to the 5 minute and setting up our levels and find again. Okay, so we marked down our highs and lows, drop to our 1 minute. See what happens. Okay, there's our candle close above and our retrace. So our line to beat is right here. Well, aggressive move in. So that's obviously going to have volume to it, and it leads the fair value gap. So that is an entry signal to go long. Place my entry at the top of the fair value gap. And I'll claim this fair value gap is mitigated, so I'm not going to put my stop all the way down there. I'll probably just do this swing low right here for our 8.1 stop loss, do 3R trade. Let's go ahead with that. Place the trade on. We get tagged in. Price is in our favor, but comes back and does not have the momentum for another stop loss. So we'll move forward to the next day. This is our 9:30 candle. A lot of news happening. We can see down here. So maybe something to be mindful of as we go through the month here. Mark down our highs and lows. We're on the 1 minute. Okay. Price moves aggressively due to some 10 a.m. news here. Let's take this one as PMI data. So we're looking for the retrace right there. So this becomes the line to beat. Testing that level again. Does it come back with conviction is what we want to see. Approaches that line, but sellers seem to jump back in. But again, that's a couple of taps on that line before a close above. So there's our close above. Question is, it does not have the volume. You see how this volume bar is under the running average, which is that blue line. So I deem that as not enough volume. It also doesn't leave a fair value gap. So that is one failed attempt. That is the next retrace we could look at here. There's the candle close. It has volume, but it doesn't leave the fair value gap. So that is the second strike. But since it does have a retracement, we're trying one last time. We're approaching our 12 p.m. time zone, our time limit rather, and that's it. So we don't get an entry signal across our two main criteria on this day. So we don't take any trades. I'd argue that those first two strikes help save us a loss. So that is, of course, always a positive. Whenever we can save ourselves a loss, that's a win. Yes. But here we go. Another day. There's a candle close above. There's your retrace. Okay. So a couple interesting things here. This candle does not close above. This does, but it's a bearish candle. So I actually don't count it. I want to see a bullish candle just like this one, but it doesn't have the volume. So that's going to be a strike against it, which makes sense because there's a heavy volume going down that we do not want to be a part of when we're just looking at longs. That does count as a retracement. So this is our second attempt. There's the candle close with volume above the blue line, and it does leave a fair value gap. So this meets both of our criteria for entering a long trade. Place our entry at the top of that fair value gap on the 1 minute. There is a fair value gap all the way down here. So what I'm going to do here is look at this from a big picture. I'm going to place my entry in a way that maximizes my risk to return and also doesn't require price to move that aggressively for me. So I see a bunch of 5-minute lows here stacked. So that represents liquidity for me. I'm going to put my entry right there while keeping my stop loss in a place that makes sense, which is at the end of this wick below this fair value gap. I'll then move my stop, take profit to 3R, and put on the trade. Okay, so we'll see if price comes back into that area, tag us in. It does around 11:30. Question is, what will it do now? So it's grab that liquidity, right? We're going to tell ourselves a story that makes sense against the price action we see. So it's grab that liquidity, but it continues to move down here and eventually stops us out. So today, this one is not working for us very well, but that's okay. That's why we do the back tests. And 1 month does not mean a poor strategy. Just means that we're seeing the variance that we expect to see with any strategy. No strategy is 100%. We're just going to keep on moving. There's your break and a retrace. Well, okay, so we got the candle close above and the fair value gap. Quickly there as I was moving things forward. That's your candle of interest. Going to place our entry at the top of the fair value gap for now, but going to see if anything else makes sense. So this fair value gap has been largely liquidated, so I'm going to just look at the body closes here. And move my take profit to 3R. And place my trade. So we're in. I think we just got tagged in. Yes. Okay. All right. There we go. We finally got a winning scenario here. What I'm going to do is move my stop loss to break even. And I'm going to take some dollars off the board. So I'm going to claim some profits. I'm going to claim 50% here on this trade. I want to recoup some dollars, but there's my take profit. So I hit my 3R there in style. So that is our first win for April. So I go to the next day, and taking partials is a preference. I know folks like to let it run, but I'm trying to mimic my behavior in the live market as much as possible. I know that if I took a bunch of loss during the week, I want to see some green in my P&L. Let's say I came back to break even. At least I walk away with some profits, which is why I do that. I might change that if I'm on a winning streak and I want to let some of those wins ride. There's your candle close. Remember, it has to be a bearish candle when you're looking for shorts here. So that's why I don't count this candle right here. We are looking for a pullback just like that. And this would have been the line to beat. Here's the candle close with volume. Does it leave a fair value gap? It does, ever so slightly. But for our purposes, that counts. The bigger question is, where will our stop be? So no 5-minute fair value gaps that we can see. So in this case, I usually just do the wick of the most recent candle, especially in this where so much volume is coming in. So I'm going to do a 3R. So I trade here, max 125. Okay, we're on. We price tag this in and stops us here. So, okay, we can go to the next day. Get our high and low on the 930 candle. Drop to the 1 minute. Okay, your candle closes above the line and our retrace. So there's an event right here. So you can see the details. There's the candle close above with volume. You see that, but does not leave a fair value gap. So that is a failed attempt. Our new line to beat is here because that bearish candle does count as a retracement. That's not a candle close to me. I needed to close above. This is telling me that there's a lot of belly pressure here. You see the Wicks. You see this is 3 touches in this area without a candle close. A lot of sellers are here and they totally overpower the buyers to the point where they break to the other side. This could definitely be an opportunity for a short here. There's your retracement, simple line to beat. That is a candle close with volume, with no fair value gap, which is really interesting. So this becomes your new line. This is the second attempt on the short side. And it looks like price is going to range or not. Let's see what happens here. There's a wick. Now buyers are stepping in. Okay, so sellers just came in on the second attempt with volume. But again, buyers push back. So that's a second attempt fail. The new line is actually this here, since that's the lowest point that was achieved. And we're approaching 12 o'clock, which is when I stop trading. But around 11:50, we get an aggressive move down and a fair value gap. This is why we have mechanical rules. This is a trade, even though it's only a few minutes away from my stop time. I do like it because there's no fair value gaps within range. There's one all the way up here, but I can't leave my stop loss all the way up there, nor can I expect price to come all the way back to this fair value gap, only to come back down. Can it happen? Of course, but I don't think that's realistic given the time of day. Video 3R here. Take my trade on. I get tagged in. So price comes, well, it's not on the 15 minutes, so things are moving faster than they would. But if I can get into profit here, nope, not going to happen. So I got to stop down there. And we're going to move forward to the next day. Okay, lock down our highs and lows, drop to the 1 minute. Forward. Okay, your candle close above and our retrace. So this is our line to beat. We just zoom in here, so it's super clear. And there's our candle close up volume. Does it have the fair value gap? It does. So place our entry there, move to the 5 minute for a stop place. No fair value gaps defined, so I'm going to target this candle wick low. And a 3R would take me a little bit past London high, which is a good draw on liquidity. So we're going to place our trade. We get tagged in. And I've already gone to 50%. So I'm going to take some dollars off the table. Well, I can't take 25% or 50 because it's only one contract. So this one's going to get interesting. I'm not going to close early, but I will move my stops to break even. I have no idea what's going to happen. So let's see. Yeah, it looks like we're going to come back to break even and get stopped out, unfortunately. But we'll move forward. Okay, work at our highs and lows. Drop to 1 minute. To the narrow range, so want to be careful. Get an aggressive move on up, candle close or retrace is there. We wick, but sellers step in, pushing us back into the range. Buyers come back and move us all the way down to the other side. So we get a candle close below, an aggressive move down. There's our retrace. Again, sellers continue the momentum. Okay, well, don't want to fast forward too much. So there's our candle close above wick volume. It does not leave a fair value gap technically, so that is a fail. That becomes our new line to break. Again, a wick, so buyers are defending the line. Where were they pushing back into the range? So very interesting price action. It's continuing to kind of bounce between buyers and sellers here as we approach 12 o'clock. Just to get there officially. Yes, that's 12 o'clock, so no trade for us here. Move forward, buyers, it looks like they stepped in heavy that day, taking it well above. Wow. So yeah, buyers definitely came back strong to push price up. I'm curious that those wicks that we saw earlier, maybe those were signs that buyers are really stepping in. Maybe something to look into if I can create some criteria there. Might be something worth looking into. So we marked out our highs and lows. In any case, let's focus on this backtest. There's our candle close above. Zoom in, candle close above with our retrace. Another wick. There's that candle close right there. That bullish candle does not have the volume. It's pretty much right on that blue line down there, if you can see it. And it doesn't leave a fair value gap either. So this is a fail on both sides. We're going to mark out the top of this as our second attempt. Actually, this is the highest point price goes. So we want to see buyers close above that level, which they do with aggression, with volume, and a fair value gap. So here we go again. Place our entry there for now. No fair value gaps. Aside from this one here, I'm going to say that if price goes all the way down there, it's probably going to go to the other side. So I'm going to target the bottom of this candle as my stop loss and just set a 3R trade here. If price goes further than this, it's likely going to liquidate this and this fair value gap. I don't want to have that big of fair value, that big of risk to reward, frankly. So that's why we're going to do this. Maybe one contract, it looks like. That would have been 50%. This wick above here, my alarm would have gone off. So I'm going to move the break even. I can't take partials because of the contract size. So let's see what happened. We get full take profit. So this was a full 3-hour win, no partials taken, which obviously will help our net P&L as we approach the middle of the month. Just ended up going all the way back down here. So we're going to mark out our highs and lows and keep the back test going. Okay, marked out our highs and lows here, drop to 1. Red Bull, advance. There's our candle close above. Let's just rewind back through. There's our retrace. Candle close heavy comes there. So that's completes the volume request. And it leaves a fair value gap. So we are on again. We'll leave our entry there for now. Okay, here's where it gets interesting. There's a fair value gap all the way up here. Now, and also fair value up there, which I'm entitled to move my stop all the way there too, or my entry rather. I think I have a reason to believe that price will come back to mitigate that fair value gap. And since my stop loss is pretty large at this point, I'm going to leave it there. I'd rather be conservative since there's a lot of wicks here, which tells me that could be a lot of stop losses there. If prices ever come all the way back there, it might just grab that liquidity and come back down. So I'm going to set a 3-hour trade here and see what happens. Now remember, we are setting our entry further back. We just got tagged in. Let's see if it makes sense for us. No, you get stopped down. Just curious to see what happens. Price does come back down, but it continues to range. So it's not like price reversed aggressively at that point. In fact, it moves up further. So you are justified in our move, let's say. Do the highs and lows here. Yeah, that's right before. So this is actually the first 9:30 candle. You want to be exact on these things. Or at least I try to be. Since we ran around the 1 minute, continue. Okay, we're going to come towards below, retrace. This is the farthest point that it makes. it play to. Buyers are defending that line. You can see the wicks and all touches in and around that area. They come back. The buyers cannot defend anymore. They come back. There's the volume on this candle, but no fair value gap. So that the first attempt failed. You move a line to the second retracement. And my buyers are going to try and push price all the way back to the other side. So let's go back there so we see everything that's happening. There's our candle close above. There's our retrace. It's the line to beat. They retest that level and aggressively move in with volume and the fair value gap. This is looking promising, I'll say. All right, so now we got a fair value gap down here. So I'm going to protect myself on this one. I'm going to move at my stops just to the body close. Yeah, I want to get in on this trade because I feel like price is going to move aggressively upwards. So I'm going to set it's close enough on a 3-hour trade, giving myself a healthy fair value gap. We get wicked in. Price comes back to our entry now. As considering how deep we went, we actually came back to that 5-minute fair value gap that in retrospect now, 2020, I probably should have my entry there and my stops down here. But I wanted to get in aggressively because of the momentum I was seeing in price. Now that I'm back in profit, I do want to take some risk off the table. So my stops to the bottom of this low here, since this fair value gap hasn't mitigated, there's no reason for price to come back. And if I can close above this level, this line, right? If I can close above this wick here, then I'm definitely going to go to break even. Just like that. So now I'm break even. I save myself a loss with my stop loss placement. I only have one contract, so I can't take partials. Here, we're going to stop at break even. In another world, I would have had my entry here, maybe stop loss here. I don't know, it's hard to tell. You can play this game all day, but we're just going to move forward. Be cool, that's all we can do. Place my levels and drop the 1 minute. Business count, what's the line? 45 candles. So that this count as a candle flows above level. This is the line to beat. Zoom in here. Sellers defend that line. See the wick over it. Can we find a candle close below? Yes, that is a candle close below. So this becomes the line to beat. Okay. Sellers come in with aggressive momentum and their value gaps. And there we go with that. Place the entry. And the 2.3 stop loss is really tight on gold. So I'm going to move to this wick here. I see this wick as a liquidation. Perhaps it's not really, but it stands out to me. So that's why I go with it. And there you go. So they're protecting myself. They don't fair value gaps or anything like that above versus 3 contracts. If I get into 50% profit, I can take partials. And it's not going to matter. I just stop down immediately. So that is that. Let's keep moving forward with April. Really large range. Show on. 1. Okay, candle close. Line to beat. Okay, just roll back. So we do get volume, and we get the fair value gap. We do. It's another signal. Let's do the top of this wick here. There's a lot of reason for price to come back, but I'm hoping momentum is on my side. Since if it does come back, it's likely to go higher. So let's see if we can get involved in this here. Nope. Another loss, so move forward. Counts the halfway mark of the month. See what happens at our break. Then retest. Okay. Candle close with volume, but it doesn't leave a fair value gap. There's a second retrace. Test. The buyers come back. Candle close. So let's go back. Candle close. There's your retrace. Next candle does have the volume, but doesn't have the fair value gap. So we're waiting for a retrace. There it is. This is the second attempt on the long side. It's only turned 30 so far. Candle close with volume, but no fair value gap. So that's the second attempt. No, this would be our third and final attempt. First one was right here. So the second, here's our third. It's not even 11 o'clock yet. There's our 11 o'clock. Since we're wind back. So here's the volume. And it leaves a fair value gap. So got a signal on the third and final attempt here on the long side of things. So I do not like all these fair value gaps. I think what I'm going to do is I'm going to play a little conservative here and see into the liquidity here. And I'm going to cover my stops down to that body close so that all these fair value gaps are captured. So I'll ask the price to come down to me a little bit, see if it's for real. And it's like, oh wait, it's 12 o'clock. So I'm not tagged into any trades. So that means I can't get into any trades after 12 according to my data. So we'll just have to walk away on this setup, which works out for us because it would have been a loss. That's why you have these rules. Even if that were to be a winner, I consider myself good because I followed my rules. Highs and lows. There's a candle close. There's a retrace. Seller step in. Buyers come back. There's your candle close. It has the volume to above that running blue line here. You can see. And does it leave a fair value? No, it does not leave a fair value yet, but nothing comes in here. So that's a failed attempt. Back. This is my second attempt. All right, a few things here. Go back. Is this a Doge candle by definition? Opening's 5.8 and its close is 5.8. So this is a Doge candle. It does not count. This does, and it does have a volume. Does it leave a fair value gap? It won't because of where the other wick is. So that's the second attempt failed. This is our third and final attempt here for a long on gold. There's your volume, but no fair value gap. So there you go. So 3 strikes, and we are going to walk away from this state here. Again, it worked in our favor. Price out from there. So these rules are helping us out, let's say. That's value went forward purple candle. So this is our 930 candle. Yes. Mark out our highs and lows. Okay, moving forward to April 23rd. Marked out our highs and lows. And here. Okay, the rest of the news event, a combination of the fair value gaps into the entry. Start entry there for now. I want to protect myself here. This fair value gap has been mitigated ever so slightly by this aggressive candle, so I'm going to stick with it. With my stops below this wick. Push myself to pretty hard. That's 125 here. Allows for one contract. Okay, we're on. Just get tagged in. Okay, we're in profit here. So since we go back, since we were in drawdown for so much, I want to be careful. We're also not having the greatest month, so I want to protect whatever profit I've gathered to date, year to date. So I move my stops off to remove some risk off the table. If I can kind of find myself back in this area or close above this level right here, then I'll definitely go to break even. It's 1 o'clock. At this point, it's 1 o'clock. I'm going to move my stops to break even. This is more of a mental health than anything else, frankly. I don't want to experience another loss if I could prevent it. In any case, see what happens. I have to close all trades by 4 o'clock anyway, since I trade futures on a prop firm. That is one of their rules. So I can't hold anything overnight. It's really not going to matter. But it's come back to break even at the end of that trade. So we'll move forward to the 24th, approaching the end of the month. What are our highs and lows here? So it's forward. There's our candle close. There's our retrace. Step in, back in the range. We'll prove it. So we get the candle close above. There's our retrace. We're on the other side of things. Sellers defend the line. Buyers come in aggressive, and obviously have more volume to it, and it's not legal fair value. Yeah. So stop that here again. Oh. All right. So now the question is, I'm going to place my stops below this fair value gap right here. I'm actually going to move my entry to right here, and I assume this little low here, this local low, as they call them, will be liquidated. So pretty tight. I'm not asking the price to move very far for a take profit. Come back to time we in right before my 12 o'clock stop time, and stops me out. And a rough April here. Okay. So we gotta move forward to the 25th. We got our candle close above. Your retrace. All right. So candle close with volume, and it leaves the fair value gap. Now, there's a lot of momentum behind it. Can it come back to me? I don't know. Now, this fair value gap is far too low for me. I'm probably going to try to get this candle, Wick, and set my 3R trade. Gives me 2 contracts to play with. Maybe Prince come back. It tags me in. Can it continue with momentum? Question. The theory is that with this much of aggressive a move, with this aggressive, maybe some orders are pending down here. So now that we've collected it, my hope is that you can see price go pretty up. But that is just theory. And we almost get wicked out. So you see that our placement saved us. We're back at break even. If I can just see something like that, what I'm going to do is move my stops to break even. And hope that we don't have to come back to collect more liquidity. And that's exactly what happens. So maybe we captured more liquidity, go back, but it's a break-even trade. At this point, in the blood, I'm trying to take break-evens and not use reward of the profit I've collected over the first quarter of the year. Counter highs and lows. Candle close below. There's a retrace. It's a retrace to where we go back to the other side. Candle close, that retrace on the top side of things. We're going to be going coast to coast here. Already, even though I haven't gotten any interest signals, I'm not very much interested since we've just been going back and forth. But the rules are the rules. There's a candle close with volume, and it leaves a fair value gap. Sellers have finally won this battle with buyers. Place my stops pretty aggressive, or conservatively rather, above these little fair value gaps. Set a 3R trade. Okay, we get just kind of there. And it goes to our drawdown. We're approaching 6 o'clock. There's 6 o'clock, so we're going to have to close this early for a $35 loss. So, charts a little bit. Yeah, it looks like I'll just check the calendar here. So we have 2 days left in April. Okay. So let's wrap up April here. Second to last day of the month. A candle close. And retrace. Candle close. It's small, but it has volume. But it won't have a fair value gap because of the candles before it. So this becomes our second attempt. Okay. Rewind back. So there's the candle close. It does have volume barely, but it's not going to have the fair value gap. So that is a second attempt failed. Let's see if we can get a third attempt before 12 p.m. It doesn't look like it's going to happen. 11:30. And at 12. So rapid is the 29th done. Price tanked from there anyways, so that worked out for us. The criteria saved us 2 losses there. That's the candle close with volume, but no fair value gap. Or sorry, excuse me, that's the candle close and the retrace. So this becomes our line to beat. Okay, candle close. There's your retrace. Last day of the month. Sure, candle close with volume. And it leaves a fair value gap. So it looks like we're going to get into a trade here the last day of the month. No fair value gaps within a immediate range, I'll call it. Let's cover the wick here. Give myself some breathing room. Or take stop loss. Pre-conference to trade. Let's see what happens. We get tagged down. Almost get stopped out. Again, I'm going to be conservative here. We have literally almost barely got stopped out there. It's crazy. So I'll remove myself just above this high to take some risk off the table. And at this point, I'm just going to wind back. At this point, it would have been 50%. So I'll remove myself to break even. And I'm going to take the contract off to lock in some profit. See what happens. At this point, given where we've been, we're approaching 6 o'clock. So let's track that. Okay, that's 6 o'clock. So I'm going to close out whatever remaining profit we do have. I'm not going to get to take profit, but it is a win to close out the month. And that's a wrap on April. A 30% win rate isn't pretty, but with a 3-to-1 risk to reward ratio, the math keeps me in the game. This is the process over profits mindset in action. One red month doesn't break a strategy. More than anything, it just tests me as a trader. Biggest takeaway for me this month was trade management and how it saved my capital. If you're struggling with a losing streak right now, remember, your job isn't to be right every time. It's to stay disciplined enough when you're wrong. In this backtest, I'm sitting at 52% across 50 trades in the year so far. In the next video, I'm taking this data into May to see if the market environment shifts back in my favor. If you want to see the raw reality of the road to profitability, hit subscribe. And if you're looking for another trade breakdown video, then check out this one right here. Every trade teaches me something different. And this next video may help you see the charts a little bit differently. I'll see you there.